Welcome to LexTalks, Legal Topics Simplified. We make Indian law understandable and engaging. Today, we're diving deep into the world of licensing of banks in India.
It can seem a little intimidating.
It can, but that's why we're here, to break it all down. So where do we even begin?
The Reserve Bank of India.
The RBI.
The RBI, they're the ultimate authority. They're the gatekeepers of the entire financial system in India.
So no new bank can just open its doors
Without their plus
in the form of a license.
in the form of a banking license. And they don't just approve or deny applications, they set the rules.
And define the different types of licenses.
And monitor the banks to make sure that everything is running smoothly.
Yeah, which makes sense considering the crucial role that banks play in the economy.
Yeah.
So I've heard that there are two main types of banking licenses.
Yes.
Can you tell us a little more about those?
Sure. The first one is the regular banking license.
Okay.
And this is kind of the all-encompassing license that allows banks to offer the whole range of services.
A full package. From accepting deposits to lending money.
Yeah, providing trade finance, issuing guarantees.
Right. It's for aspiring banking giants.
Yes.
What about the second type?
That's the authorized dealer license.
Okay.
And this one is specifically for entities that want to deal in foreign exchange.
Okay.
So it's actually a separate license under the Foreign Exchange Management Act.
Hmm.
And this is essential for anyone that wants to move money in and out of India.
Ah. So they're kind of like guardians of India's financial borders.
It's a good way to think about it.
Making sure that everything happens above board and responsibly.
Yes, very important role to keep the system stable.
Okay, so we know that the RBI is in charge.
Yes.
We know there are different licenses. But how has the process of getting a license changed over time?
That's an interesting question. Before 2016, India followed a stop-and-go licensing policy, meaning that aspiring bankers could only apply for a license during specific windows of time.
Like you had to catch a bus
Okay.
at a certain time.
Exactly. But in 2016, that changed with the introduction of the on-tap licensing system.
Okay.
Now, anyone who wants to set up a bank can apply anytime they please.
Wow. What a game changer.
It is.
No more waiting for the stars to align. But I'm guessing the RBI doesn't just hand out licenses like candy.
No, they don't.
Right. Even with this on-tap system.
Yeah.
What are some of the key factors that they consider when evaluating an application?
One of the most crucial aspects is the concept of fit and proper promoter.
Fit and proper.
So the RBI really scrutinizes the individuals behind the bank,
Okay.
looking at their background, their experience, financial history, their ethical conduct, everything.
It's like a super intense background check. We want to make sure that these people running the bank are squeaky clean.
Yeah, exactly.
Mm.
They want to avoid any situation where someone with a shady past could potentially put depositors' money at risk.
Yeah, that's a good point. It's not just about having a great business plan. It's about having the right people at the helm. What about the actual application process itself? What kind of information do they require?
It's very detailed. They ask for everything from the background and experience of each promoter to the financial health of the promoting entity. They really scrutinize the entire promoter group. They look at the interconnected entities, shareholding structures, you name it. They want it.
Why do they go to such lengths?
We're talking about people's life savings. The RBI needs to be absolutely certain that the bank's foundation is solid and that there are no skeletons hiding in any closets.
Okay. Starting to understand why getting a banking license in India is considered such a challenge. A feat.
It is.
But it's in the interest of building a stable and trustworthy banking system that benefits everyone.
Absolutely.
This does raise a question, though. If the RBI digs so deep into their past, could it discourage some really genuine and well-intentioned individuals from even applying?
Yeah, that's a valid concern. It's a bit of a balancing act. They want to make sure they're doing thorough vetting,
Yeah.
but they don't want to create unnecessary hurdles for new entrants. And actually, this leads us to an interesting development that's happened in recent years.
Well, I'm intrigued. Tell me more.
The RBI has started taking some steps
Okay.
to streamline the process while maintaining those really high standards.
Okay, that makes sense. So what kind of steps are we talking about?
For example, they have introduced simpler application forms,
Okay.
particularly for smaller institutions, like small finance banks.
Oh, interesting.
They've recognized that a one-size-fits-all approach might not be the best way to encourage diversity in the sector.
So making it more accessible for players who might have a different focus.
Exactly. Small finance banks, they play a crucial role in reaching underserved populations and promoting financial inclusion.
Yeah.
So it makes sense to tailor the process a little bit.
Yeah, that makes a lot of sense. This is all so insightful.
It is fascinating.
It's amazing how much goes on behind the scenes
It
to
is.
ensure this stability and integrity of India's banking system.
Yes, it's very important.
But tell me, with all this emphasis on due diligence and scrutiny, how long does it typically take for the RBI to actually make a decision on a banking license application?
Well, there's no fixed timeline, but you can expect it to be lengthy. Typically it takes about 18 months, maybe even more.
Wow.
And that includes lots of back and forth discussion, clarifications, information requests from the RBI.
Patience is a virtue.
It is. It's not a sprint. It's a marathon.
Yeah.
But once the RBI grants its in-principle approval, which is valid for 18 months,
Okay.
then the applicant has to work to secure the full license within that time.
So even after getting that initial nod, there's still a lot of work to be done to get the bank up and running.
Lots to do.
On a journey.
It is.
This has been an eye-opening start to our deep dive. We've learned about the different types of licenses, the fit and proper criteria, the shift to the on-tap system, and that rigorous application process.
You've covered a lot of ground.
We have, but there's still much more to explore. And that's what we'll be doing in the next part of our deep dive. We'll delve into the world of small finance banks, explore the rules governing foreign investment in Indian banks, and even touch upon the legal framework for bank liquidation. Stay tuned.
Welcome back to our deep dive into the world of bank licensing in India. Before we went off on that fascinating tangent about streamlining applications, we were talking about how the RBI ensures that only the most capable and trustworthy entities are given the responsibility of shaping the future of Indian banking.
Right. And I think it's time we dig a little deeper into one of the more unique players in the Indian banking landscape, the small finance banks, or SFBs as they're often called.
SFBs are indeed a fascinating development. They operate with a narrower scope than traditional commercial banks, offering a more focused range of products and services. Think savings accounts, credit facilities, the essentials, especially for those who might not have access to regular banking.
So they're not trying to be everything to everyone, but rather focus on a specific segment of the population. Who are they primarily targeting?
Their main audience is the underserved sections of society. Small businesses, micro-entrepreneurs, individuals in rural areas, those who often struggle to access traditional banking services.
It's almost like a microfinance approach, but within a formal banking structure. It sounds like a vital role, especially in a country like India, where financial inclusion is such a crucial goal.
Absolutely. SFBs are playing a key role in bridging the gap in financial inclusion and empowering individuals and communities who've traditionally been excluded from the mainstream financial system.
Now, this raises an interesting question. What does it take to set up an SFB? Is the licensing process any different from what we discussed earlier for regular commercial banks?
The fundamental principles are the same. The RBI still needs to be convinced that the promoters are fit and proper and that the proposed bank is financially viable and committed to its social mission.
So that intense scrutiny we talked about earlier still applies.
Absolutely. But there are also specific guidelines and regulations tailored to the unique nature of SFBs, ensuring they operate within their defined scope and effectively serve their target market.
It sounds like a challenging but incredibly rewarding endeavor, especially for those who are passionate about making a positive impact. But let's shift gears a bit and talk about another key aspect of the Indian banking sector, foreign investment. How do global players navigate this landscape? Are there any restrictions on how much foreign investment is allowed?
Yes, there are specific rules in place. Foreign entities can acquire up to 49% stake in private banks without needing special approvals. This allows for significant foreign participation, bringing in expertise and capital.
So up to 49% is a free zone. But what happens if a foreign entity wants to have a controlling stake going beyond that 49% threshold?
That's when they need to seek approval from the government. The government will carefully evaluate the implications, taking into account factors like national interest, economic impact, and the overall stability of the banking sector.
It sounds like a delicate balancing act, attracting foreign capital while safeguarding national interests. What about public sector banks? Are the rules different for them?
Public sector banks operate under a different set of rules. The threshold for foreign investment is lower, allowing only up to 20%, and even that requires government approval.
So it's much more tightly controlled. I guess it's because public sector banks play a vital role in the Indian economy and are often seen as symbols of national pride.
Speaking of individuals with a connection to India, what about non-resident Indians, or NRIs? Are there any limits on their involvement in the banking sector?
Yes, NRIs also have specific limits on their individual and aggregate holdings in banks. These regulations are designed to ensure a balance between NRI participation and investments from resident Indians and other entities. It's fascinating how the RBI and the government have created this intricate framework to manage foreign investment in banks. It's all about finding that sweet spot between openness and control. But now I want to address something we haven't talked about yet, the possibility of bank failure. It's not a pleasant topic, but it's important to understand what happens when a bank runs into trouble.
Of course, while the RBI works tirelessly to maintain the stability of the banking system, there are instances where a bank might face severe financial distress and require liquidation. It's a last resort, but it's a reality we need to be prepared for.
So who has the authority to decide when a bank needs to be shut down?
The High Court holds that power. It's a serious decision with far-reaching legal and economic consequences. Fortunately, India has taken steps to make this process more structured and efficient.
Oh, tell me more about that. What kind of steps have been taken?
In recent years, India introduced the Insolvency and Bankruptcy Code, or IBC. This code streamlines the resolution process for financial firms, including banks, creating a more predictable framework for handling such situations.
So it's like a roadmap guiding the liquidation process and ensuring fairness and transparency for everyone involved.
Exactly. The IBC brings much-needed clarity to what can be a very complex and often emotionally charged process.
It's good to know there are systems in place to handle such situations. But what about preventing them in the first place? What kind of measures does the RBI take to monitor banks and identify potential problems early on?
The RBI has a range of tools at its disposal. They conduct regular on-site inspections, review financial statements, monitor key performance indicators, and even engage in stress tests to assess how banks would cope with various economic shocks.
So it's a constant process of monitoring, evaluating, and adjusting regulations to ensure the system remains healthy and resilient.
That's a great way to put it. The RBI is always on the lookout for potential risks and vulnerabilities, proactively taking steps to prevent them from turning into full-blown crises. And one of the key areas they focus on is risk management.
That makes sense. Risk is inherent in any financial system, especially one as large and complex as India's. What does the RBI do to ensure banks are effectively managing risk? Welcome back to the final part of our deep dive into the fascinating world of Indian banking law. We've covered so much ground, from the initial thrill of starting a new bank to the nitty-gritty of regulations, risk management, and now it's time to talk about what happens when things don't go as planned.
When a bank fails.
Exactly. It's not the most cheerful topic, but it's a crucial part of the picture. So let's get right to it. Who has the authority to decide when a bank needs to shut down in India?
That authority rests with the High Court.
Hmm.
It's a serious decision, with huge legal and economic consequences.
It makes sense that such a weighty decision wouldn't be taken lightly, or by just any entity. But what about the actual process itself? How does it unfold once that decision has been made?
Well, India has actually taken steps to streamline things in recent years.
Oh, really?
Yes, the introduction of the Insolvency and Bankruptcy Code,
The IBC.
the IBC, has really changed the game.
Uh-huh. So we talked about it briefly in the previous part, when we were discussing how distressed financial firms are resolved.
Exactly.
But how does it specifically apply to bank liquidation?
Well, it provides a clear framework for handling the liquidation of banks
Okay.
to ensure fairness and transparency for everyone involved. It outlines the steps, the timelines, the roles of various stakeholders.
So it's like a roadmap,
Yeah.
guiding the entire process.
Yes.
Reducing uncertainty and minimizing the potential for chaos and all those disputes that could arise.
Exactly. Brings much needed clarity.
Before we delve too deep into the intricacies of the IBC, I want to take a step back and consider the human side of this.
The depositors.
What happens to the people who have entrusted their hard-earned money to these institutions?
Yes, their money is at stake.
So is there a guarantee they'll get everything back if a bank goes under?
Well, there's a deposit insurance scheme in India.
Okay.
It's managed by the Deposit Insurance and Credit Guarantee Corporation.
DICGC.
Yes, the DICGC. It provides insurance coverage up to a certain limit for deposits in eligible banks.
So up to a point, they are protected. But what about any amount that exceeds that limit?
The remaining amount becomes part of the bank's assets, which are then liquidated to repay creditors.
So depositors with larger sums might have to wait longer, potentially face partial recovery, depending on what's left.
Yes, that's right. It's a complex process, and the outcome can vary depending on the specific circumstances of the bank's failure. But there are mechanisms in place.
To protect depositors' interests.
As much as possible.
It highlights how important it is to choose a bank carefully, one with a solid track record, and to really understand the terms of that deposit insurance.
Absolutely.
But let's bring our focus back to the legal and regulatory side of things. You mentioned the IBC earlier.
Yes.
Can you walk us through how it actually streamlines this entire liquidation process?
Sure. So the IBC introduces the concept of a resolution professional. This professional takes charge of the bank's affairs once liquidation proceedings begin. This person is an expert in insolvency and bankruptcy law, and they're responsible for managing the entire process.
The whole thing.
Yes, from collecting the bank's assets to verifying claims and distributing proceeds to creditors.
So there's like a captain steering the ship through a storm,
That's a good way to put it.
making sure everything happens in an orderly manner.
Yes, it brings a lot of expertise and objectivity to the process, which could otherwise get very messy.
Yeah, it's crucial to maintain confidence in the system even during those difficult times.
Absolutely.
Now, I understand the IBC also introduces a timeline for this entire process.
Yes, that's right. The entire process has to be completed within a specific time frame, generally 330 days.
Oh, wow. So that helps avoid unnecessary delays.
Yes.
Creditors, including those depositors, don't have to wait indefinitely for resolution.
Exactly.
That's a big improvement.
It is.
I've heard in the past these proceedings could drag on for years, adding to the uncertainty and the stress for everyone.
They could.
So the IBC has brought about some significant reforms.
It's needed.
But let's talk about another aspect of bank liquidation that we often hear about in the news.
The recovery of bad loans.
Yes, those non-performing assets, the NPAs. What happens to them?
That's a major concern for any banking system. And it becomes even more critical during liquidation.
Right, because recovering those bad loans can significantly impact how much money is ultimately available to repay the other creditors,
Absolutely.
including those depositors we were talking about. So what tools does the RBI have to make sure that banks are diligent in recovering those funds?
The RBI has a range of measures they can use. They can issue directives to banks, impose penalties, even initiate enforcement actions if banks are found to be lax in their recovery efforts.
So they have some power
They do.
to get things moving.
Yeah.
But how does this recovery process actually work in practice?
Well, banks typically try to recover these loans through various means: negotiation, restructuring, sometimes even legal action. If these efforts fail, the loans might be sold to asset reconstruction companies.
Okay.
And these companies specialize in recovering dues from defaulters.
So it sounds like a very complex process, especially when dealing with large corporate defaulters who might have their own legal teams and strategies to delay or even avoid repayment.
It can be a challenge, but the RBI has been stepping up its efforts to ensure that banks are more proactive and accountable in their recovery efforts. They're also tightening regulations to prevent the buildup of those bad loans in the first place.
Prevention is always better than cure.
It is.
This has been a truly insightful deep dive
It has.
into a topic that, while not always pleasant, is absolutely essential for understanding the full spectrum of Indian banking law.
We've covered a lot.
We have. From the authority of the High Court to the role of the IBC in streamlining the entire process, the implications for depositors, and the complexities of recovering those bad loans, it's clear that the RBI is committed to ensuring the stability and integrity of the Indian banking system, even in the face of these challenges.
Yes, they're working hard to make things better.
And that's what matters. Their efforts to strengthen regulations, to improve those risk management practices, and to streamline that liquidation process are all aimed at safeguarding the interests of the depositors
Absolutely.
and maintaining confidence in the sector. It's a testament to their commitment to building a resilient and inclusive financial system that serves everyone.
That's right. It benefits all Indians.
Well, we've reached the end of our deep dive into the licensing of banks in India. We've covered a lot, from the initial excitement of starting a brand new bank to the complexities of regulations, risk management, and the legal framework for handling bank failures.
It's been a pleasure.
Sharing this journey with you. Thank you for joining us.
And thank you for listening.
Stay subscribed to LexTalks for more deep dives into the fascinating world of Indian law.